This is Bazaar Morning Call. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. This is, of course, Bazaar Morning Call. I'm Prashant. With me, my colleague Sonia, and Rima is with us here over the next two and a half hours as well. Guys, hi, good morning. And as they say on a Friday, thank God it's Friday.
Yeah, I'm sure the bulls are saying thank God it's Friday for sure, because, you know, it's been 3 days now running that the market has ended in the red. And the global markets are not looking that great. There are some signs that there perhaps is a correction coming with the way the bond yields are going, the dollar index as well. So let's see. But we can't say thank God it's Friday because we're working tomorrow as well.
We're working tomorrow and we've got a long evening ahead of us with Reliance earnings.
But yeah, you should have just let it be. I mean, I was going to go into the weekend thinking, well, then in the morning and you wake up and you say, oh, okay, you got to go to office for an hour, 2 hours, right? But in any case, there's a trading session tomorrow. It's going to be staggered, in the morning and then, of course, in the afternoon. We'll get you timings, etc. In a bit from now. But let's just kick it off with what you need to know as we begin another trading session. This is the backdrop into which we're coming this Friday into. So the last 5 sessions for the Nifty have been absolutely astounding in terms of moves, right? So first, you basically had a 500-point rally. And this was largely over 2 days, but end to end, it's 3 days. A 500-point rally, and then in the last 2 sessions from the highs that we made, a new all-time high, the Nifty's pulled back about 600 points or so. So, net, if you just look at the change where we were 5 days back, absolutely nothing with all that has happened. The question is, right now is the pullback, the fall, complete for now? Just for now. That's the important, critical part. We'll come back to this question in a bit, but as we do, let's just quickly address the overnight session as well. So it's positive. The Nasdaq was up about 1.3%. The S&P was up about 0.9% as well. US data was strong, so you had basically initial jobless claims, which were much lower. That's one. And you also had housing data, which was strong. So data out of the US continues to, you throw in the fact that on Wednesday we got the retail sales, which showed that the US consumer is in good health. And this paints a pretty good picture of what the US economy is looking like. Now, you had a Fed speaker, and there are many, but this was stood out. So Fed's Bostic, he reiterated his preference for rate cuts only in the third quarter, not March, not the second quarter, but in the third quarter, right? He said this, but market pricing for when the Fed will cut rates still stays at about 15 basis points for March. It's come off. Before last Friday, before Christopher Waller made those comments, that number was 25. It's come down to 15 for the month of March, but it's still there. Market's not completely pricing that rate cut starting March out. The 10-year was up about 3 basis points. We are at about 4.14. Nothing very dramatic, but it's, of course, moved up from the lows recently. Oil prices, they're up about 1.5%. We are back at about $79 in the Brent to a barrel. And of course, the big one, we're tracking US markets and we track NASDAQ, Dow, but we got to track the ADR, HDFC Bank ADR, right? So you had a 20% fall the previous 2 days, and last night the ADR was up about 1.6% or so. So that is good to see. Now, I just come back to that question. Is the pullback complete for now? Is the fall complete for now? How will we know? You basically have got to track the price action to answer that question. Now, the Nifty, first of all, the Nifty should not break the low that we saw, which is 21,285. That's the first condition. Then you basically watch bounces. Watch for a bounce to 21,704. The way to do it, when you get these kind of falls, and if you get a bit of a interim kind of a pullback, is to track retracement of that fall from the all-time high 2 days back to the fall that we saw, to the low that we saw yesterday. The 50% retracement is 21,704. That's the first level which the market needs to climb, get its head above. And then you look at the 61.8% retracement of this 2-day fall, which is 21,000, roughly 804 if you want to be precise. Now, it could be, and I would imagine at this stage, sitting where we are right now, that the answer to that question is the pullback, the fall complete. I would answer in the affirmative, that yes, maybe for now it is done and we get a pullback. Whether this is a pullback which will the retracement of the counter trend rally, or this is something bigger, we'll only know once we get to this 50% and 61.8% retracement levels, which is 21,700 and then 21,800 levels. Whether this counter trend rally fizzles out or not, we'll know once we get to those levels, really. Now, let's just get to the Nifty Bank as well and address the levels there. So for the Nifty Bank, it, by the way, retraced. It came off and dropped all the way to 50% of the full last October rally to the December high that we saw. That is 45,371. The low yesterday was 45,430. So we almost got to that level. And that's why the Bank Nifty, of course, led by HDFC Bank, has been the much weaker index. Here, watch for a bounce on the Nifty Bank. Again, it's a two-day fall retracement. The first number is the 38.2% retracement. That stands at 46,530. And the next level would be the same retracement of the two-day fall, 50% retracement, which is 46,868. Again, the condition is that the Nifty Bank should not break the low that we saw recently, which is 45,430. That's a low that we saw, intraday low that we saw yesterday. So I would imagine that for the time being, for the very near term, maybe this drop that we've been seeing perhaps is kind of done, and we start to move in the opposite direction. What to do in terms of whether this is just a counter trend rally, we'll know at those retracement levels that we put out. The GIFT Nifty is indicating about a 40-point higher start. Sonia.
It's really all over the place, right? That's the only way to put it. I mean, very, very volatile markets is what we have on our hands. But this morning, the Nifty implied opening is about 20 points higher. Remember, the US markets also pulled back. There was a tech-led rally in the US market. So whether it was Nvidia, AMD shares, all hitting record highs on the back of a chip surge as well. So a lot of those stocks did well. So there's definitely some bounce back on the cards this morning. Whether it is sustainable, time will tell, because we have a lot of cues to look forward to. Reliance earnings are in the evening later today, and the oil and gas sector in general has been on the weaker side this quarter. So we're expecting the oil to chemicals business to report weak numbers this time. So you won't really get a big trigger from Reliance Industries. ICICI Bank, Kotak Mahindra Bank will be reporting its earnings tomorrow, so keep an eye out on that. Now, in banking, it's very interesting what IndusInd Bank did, right? IndusInd Bank's numbers actually will soothe the market's nerves. The NIMs were good. They were better than what the street was estimating. And the market's big fear after what we saw with HDFC Bank was that all banks would report weak net interest margins. But that's not the case with IndusInd Bank, which is a good thing. So the focus is now on companies that are delivering good results. IndusInd Bank will be case in point. Market is rewarding good numbers. So we saw it with the case with Oracle yesterday, right? Oracle was up about 30-odd%. The Bank Nifty is the one I'm watching very closely. It closed at that 100 DEMA yesterday. So if it bounces back today, courtesy IndusInd Bank, and of course expectations from ICICI as well as Kotak, SBI, all set to come out, that will be the space to watch in the pullback. For the overall index, the broad range of the Nifty is somewhere at 21,300 to 21,600. Yesterday's high was 21,539. So that could be the resistance on the market on the upside. Also, as I was saying, the global markets are not looking that great. One, the bond yield, it's surging once again above that 4% mark. Two, the dollar index is also showing a bounce. It's now above 103, 103.4. So global markets are definitely showing a sign of correction, and that's not a good thing for our own markets. So pretty much all over the place. But yes, this morning some pullback is on the cards.
And there were also some demand concerns, right? Macy's, the prominent retail store, they've announced job cuts to the tune of about 2,350 employees. And they've also said that they're planning to shut down 5 stores. Maybe it's a move towards online, spending. But the fact is that physical stores of Macy's, a large brand there, retailer, is planning to shut down. But a quick word on Asia before we, get started. Asia's off to the races, actually. You've got Japan, which is up 1.5%. Japan released its inflation data. And inflation in the month of December has cooled for the second consecutive month and now at the lowest level since June of 2022. The Japanese central bank will be meeting on the 22nd of January. So this is the last data point going into that. And the Nikkei market is up 1.5%. Taiwan is the other one showing you considerable strength. And that's borrowing the chip maker rally that we had with TSMC raising the forecast to 20% for FY20, calendar year 2024. So all the semiconductor related stocks are doing very well in Taiwan, and that's fueling the rally there. Hang Seng is up close to about 0.5%, but Korean markets too are up nearly 1%. So, Asia's actually on a pretty good note. You spoke about the big earnings, actually Reliance and HUL. These are the two big ones, and these have been the two underperformers. So Reliance Industries in the last 1 year has only given you a rally of 10%. Of that, 5% has come in only since the beginning of the year. So it's not been a stock which has participated. And the other one is HUL. Now, at a time in the last 1 year when the Nifty FMCG index has rallied 26%, HUL is down 4%. So HUL too has been quite the underperformer. And since you guys spoke about, Saturday's, trading, let me just put on board the timings for tomorrow. So the first trading session will be between 9 and 10 a.m. and the second trading session will be from 11:15 to 12:30. So 2 trading sessions staggered with a 1-hour break in the middle.
Okay, long day ahead and long weekend ahead for us here, especially guys who are trading. But let's see how things shape up. For now, looks like it's going to be a decent opening in trade, and then we'll take it from there. On the equities, first up, we have Seshadri Sen of MK, who says their 2024 year-end Nifty target of 24,000 imputes an 11% return for the benchmark, while they expect small and mid-caps to outperform. He says their model portfolio focuses on large and mid-caps, and they are underweight on financials and overweight on consumer discretionary. He also says key themes for 2024 are rate cuts, the budget and reform, and probable revival in mass segment spending. He says earnings growth should continue in the mid-teens with rising return on equity. He says small and mid-cap earnings growth should exceed the Nifty and drive further outperformance.
Okay, well, let's get you some money market views as well. This is V. Lakshmanan, a Federal Bank, who says that the bank of robust data, the US 10-year yield traded above 4% levels, while the dollar index traded at a 1-month high. He says the strength of the USD was complemented by the FII outflows in Indian equities, which weighed on the currency. He expects the pair, the dollar INR, to trade between 82.92 to 83.38 to the dollar in the next few trading sessions.
All right, and on the bonds, Lakshmanan V speaks about how domestic bonds saw buying interest as December CPI was lower than expectations with the fall in core inflation. He says US Treasuries rose and remained above 4% after stronger than expected US retail sales and rise in UK inflation in December. He says the markets seem to have trimmed the odds of an early rate cut by the US Fed. Also, the coming sessions could see the 10-year benchmark bond yield trade in a range of 7.15 to 7.25%.
We have lots of stock-specific action to track today. We'll get to it in just a bit in our special Top 10 segment. We're looking at IndusInd Bank, Finolex Industries, Shalby, Lupin. These are on the radar on the back of positive news flow. Metro Brands, Home First Finance, Supreme Petrochem, 360 ONE, Dixon Technology, Shoppers Stop are the stocks on our radar that are likely to open in the red. Get into a break. Our list of top 10 stocks is lined up next.